Nice to see you guys. Um,
Actually, Jim, let me do a quick introduction again for the recording. I'm Jen Hicks. I'm with Maine Woodland Owners, and we today are talking about timber tax and things to think about for the time for owners who are looking to harvest and things they have to think about when it comes to filing taxes on any income from your timber harvest. We have Jim Norris today leading this program. He's a retired IRS forester. He works with lots of woodland owners who he has been supporting to help them through this process, and he's here today to talk about all that he knows and all the things he wants people to know when it comes to timber taxes. So Jim, thank you very much for joining us. And I appreciate you sharing your knowledge, and I'm now handing it over to you.
Thank you, Jen. Welcome, guys. I've done this quite a few times. Used to do it on a traveling show. Fortunately, with Teams and Zoom, it's a lot easier and pretty efficient. As Jen said, I worked for the state of Maine for 9 years as a forester and an administrator way back. I did my senior thesis in forestry on the Maine tree growth tax law. So my whole career has been in property tax and income tax. It's fairly unusual for people to understand that the IRS employed foresters. There's lots of specialized tax treatment for forestry activities, everything from depletion to valuation of donations to depreciation of timberland assets and others, and got involved in a lot of natural resource appraisal work, timber, peat bogs, you name it. But the common denominator was valuation. And as you'll see during my slideshow PowerPoint, there's a lot of valuation related components. Fortunately, not all of them require that you secure an appraiser, that you have a little common sense and understand that the IRS is your friend. No, that they're not unreasonable if in fact you explain yourself. I mean, as you'll see, a lot of my clients, I do still have consulting for a variety of clients, mostly small owners. The key is just explaining. If you don't know something, say so, and say, you couldn't find an answer, or, if your records are sketchy, they're in a shoebox, well, so be it. I mean, it happens all the time. And so, the IRS is looking for some common sense and reasonableness, especially, these kinds of timber sales. I'm assuming that your priority in listening to this is you either made a timber sale or going to, or I'm going to focus on the timber sale side of it, even though some people who are trying to claim expenses as a business, as a timber business, there are all sorts of rules that apply to them, just like they would any other small business, except that timber is not an annual crop. It's very long term, and as a result, trying to trying to deal with it, especially if you're an accountant or a tax preparer, most of them have never done anything relating to reporting a timber sale. So with that, what I'm going to do is share my screen, and I don't do a lot of these, so I'm a participant. I serve on the Land for Maine Future Board and a couple land trusts, so I'm usually watching, not presenting. So if I'm a little klutzy, just bear with me. So I'm going to share my screen, which is my PowerPoint. And anything you want to know, whatever, before we start? All right, here we go. Let's see. All right.
Hey, Jim,
Yes.
I just realized just to let folks know, in order to interact with you, you're open to having people just jump in and
Oh,
say
yeah.
some questions. There's also a chat feature. So if you mouse at the bottom of your screen, you'll see there's an icon that says chat. Click on that, opens a box. Go ahead and send questions that way. So I'll keep an eye on that for you, Jim. So if anybody's sending a chat, I'll get that there.
I'm interested in I don't see the slideshow option. Oh, there we go. Okay. All right, here we go. Let me just move this back up here. Everybody see my screen okay?
Looks
All right.
good.
I giving some credits here because there's a document called the Forest Landowners Guide to Federal Income Tax, published by the U.S. Forest Service. It used to be an actual publication. Now you can get it online. It's a real Bible. I I've used it a lot in this presentation where I simply copied and pasted key pieces of that, and with their permission, of course. But the timbertax.org website has a bunch of college professors, forestry and accounting, who maintain a website with that handbook that you see, but also a lot of other related information. So how timber taxes work really depends on the purpose that you're holding timber. Personal use, investment, and business, and each one of those will entail some different applications of the law. Personal use is just what it says it is. If you've got a 2-acre house lot and half of that is some trees out back, a little, it's your personal residence. And despite the fact that there are some trees on there, it's pretty hard for you to consider, the 1 acres of trees in your backyard an investment. So there really isn't much for tax advantage there. However, most of us, I have a 30-acre lot. I live on part of it. I used to grow Christmas trees on part of it, but I've got about 25 acres of forest land that I've harvested 3 times in the 40 years that I've owned it. I took my family to Disney World. I refinanced my mortgage. I put all new replacement windows in my house from my woodlot. It was an investment, and I was lucky enough to. That's my younger brother calling. Sorry. I was lucky enough to have a productive woodlot with substantial value, but today it's, instead of being a softwood property, it's hardwood, and I've got, I've sold firewood and I have my own, so it's an investment. It might be very long-term, but if you're doing something, if nothing else, sitting in a presentation like this, or going to some workshops, or getting some advice from somebody who knows more than you do, it's an investment, and you're, at some point in time, you're likely to make a sale. Sales being a wide variety of different types of sales, cutting it yourself, hiring a logger, hiring a forester to hire a logger to somebody cut and haul, and even now just hiring somebody to manage the whole thing for you, including the whole 9 yards, all the way to the mill. And then, of course, there's a business opportunity. Again, just like any other business, you have to be in it for, there are a lot of benefits to some of your expenses and how you treat your income, but it has to be for profit. And, there are all sorts of hobby rules, people raising I said raising dogs. You have to undertake activity that's going to generate income periodically. And forestry, a woodlots, as you would understand, is not like anything else. You can't grow corn every year, and you like corn, you can't sell it, but you might have one timber harvest over the entire ownership period. But if you do a lot of things and you want to be considered a business, you need to be out there doing things that improve the growth of the timber. And, there's a chance that you may actually qualify as a business per the IRS. Lots and lots of people try to declare themselves a business, but there are standards that you have to be involved with, as far as the Internal Revenue Service code is. And, things, like I said, normal small businesses, you have regular income, weekly, monthly, or yearly. Timber wise, not so much. So one important aspect of all of this is costs, including, your original cost, other capital costs, and by capital costs, I'm going to get into that, and potentially deductible expenditures, even if you're not harvesting timber, your cost to make a sale, what your basis is, so that if you make a sale, like with selling your house or any other asset, your net gain is your original and adjusted costs minus your basis. You purchase assets, you inherit assets, we'll get into that, or you might get assets by gift. So we'll be focusing on, capital costs are just what they say. They're not costs that are incurred on a yearly basis necessarily, that these are costs that add to the value of your property as opposed to maintaining the property. And getting those costs, like costs in part of the cost of acquiring timberland, is capitalizing the cost of timber and then recovering it when you sell timber. So as you might well suspect, there's all sorts of capital costs, but none of these costs are expendable on a yearly basis. Even if you were in a business, but certainly if you're an investor.
Hey, Jim,
Yes, sir.
I have a question.
Yeah, sure.
So I have I just received my tree farm certification last month, and I spend quite a bit of money for like herbicide, pesticide, equipment to
Yep.
maintain the property. Could I deduct that if I declare my property a business?
Yeah. But you may even be able to, I'm gonna get into it. So can you explain the property again, please?
I have a 211 acre woodlot. I
Yeah.
just it's a certified tree
Yeah.
farm.
Yeah,
And I spend quite a bit of money on root stock, equipment to
Yeah.
maintain the property,
Oh, yeah.
herbicide, pesticides, all that stuff. Can I like
Yeah.
deduct that?
I think you in particular have a very good opportunity. And if you don't expense it to get current benefit,
Yeah.
you gotta, especially, you have a choice, you could capitalize it and keep it in a capital account.
Yeah.
To be recovered when you actually sell timber. But one important thing everybody should realize, I grew Christmas trees for, I don't know, 15 years, 20 years. I never expensed anything because with Christmas trees, I couldn't sell any for the first 8 or 9 years. And I had a hard time matching costs and income. Sometimes if you try to deduct all your costs as quick as possible for the shortest period of time, when you finally get around to selling trees, you're going to have less basis to offset it. And in my case, with Christmas trees, I only had to wait 8 years, but I just capitalized everything and came up with a cost per tree when I sold Christmas trees. But
Okay.
yes, I think you have a real good opportunity to declare yourself a business from an IRS standpoint. And remember that, as I said earlier, if if you're undertaking activities that are adding value to the property, even though it's, it seems somewhat indirect, that's a business activity, making something more valuable to you. And it's even though you don't recognize the income as you do it, at some point in time, you're going to be rewarded by having better trees, bigger trees, and so forth. So that's really a problem when it comes to some of the tax preparers and accountants, because doing forestry is long-term. It's not even remotely regular. A lot of their clients, almost all of their clients are not in that situation. So you kind of have to recognize that and persist. I think there's plenty of information that will help that. But when it comes to forest land, you can see land, timber, buildings, and so forth. Timber land is non-depreciable. The reason, and here's some more capital costs, but and you can see they all generally relate to timberland. I did go through this. Costs associated with timber are capital expenses, but planting trees or seeding, which is not very much a practice here in Maine anymore. A lot of the companies used to undergo large reforestation activity, but due to the change in ownership, things don't look like they used to, and ownership patterns have changed. I'm not sure whether it's in the next slide or not, but land is a non-depreciable asset. You can only recover your cost in land when you sell it. There are land improvements that you can depreciate, like if you built a parking lot and covered it with asphalt, or some of the logging roads, forest land roads, some of the costs are actually depreciable, i.e. the final grade and cost of gravel that may be going to be washed away. But a lot of the rough cut and fill, grubbing and so forth is our capital costs. But need to just keep that in mind, that there are depreciable assets associated with your logging roads. If you create a logging road just for a harvest, it's entirely deductible. If there's no benefit beyond the harvest of that road, then you can deduct it against the sale. Or a portion of it, depending on, I liken logging roads to an arm. The skid trails are my fingers, and the major road is, up here. This part is not expendable, but those whatever you incurred, if you're able to figure it out for short-term skid trails and logging rolls, would be an expense of the sale.
Jim?
Yep.
I had another question for you.
Yeah,
Hope you don't mind me
sure.
jumping in.
Keep it going.
Yeah, so I'm having a timber cruise done this summer.
Yeah.
I'm hoping to get some grant money from NRCS, and one of the things I want to do is build some roads.
Yeah.
I think I have to pay 20% of that as 80-20 like cost share. Could I deduct that 20%, or is that like something I couldn't do?
Well, you remember that we're going to get to this, but in our government cost share payments may be exempt from money you get from NRCS.
Yeah.
Unless you make an effort, you're going to get a 1099. For that 80%, and what are you going to do? You're going to report it as income?
Yeah, that's true. Yeah, I didn't think about that. Yep.
Yeah.
Yeah, probably shouldn't.
But there's some rules, we're going to get to it a little, but perhaps you and I can talk at a different time about
Okay. Yeah.
It's fairly complicated and antiquated, but generally speaking, you do not have to declare that as income.
Okay.
There are some kickers to that, but government cost share payments, especially NRCS for conservation activities, may very well be exempt from taxation, period.
Okay.
And, your cost out of pocket, you generally, if it's not associated directly with a current harvest,
Yeah.
would be, you could capitalize that cost. So
Okay.
you might want to try to finagle the work and a harvest and everything. But, and timing is everything. If you, sooner or later, you're going to have some periodic regular income, and you got to think a little bit about balancing your income with, your expenditures. So there is a balance generally, but it's a different point for different people.
Yeah.
So if you inherit timberland or any asset, the cost, the basis is actually the fair market value. And we call that, stepping up the basis in accounting terms. If your grandfather purchased property for 50,000 back in 1965, and you inherit it last year, your cost basis jumps up to what that's worth today, which is a big deal. There's a lot of maneuvering that goes on to try to get your cost basis up so you minimize the difference between your sales price and what your cost basis is, because that becomes the taxable portion. And it's as of the date of death. That's that's opposed to receiving assets as a gift. There is a real interesting process that goes on for people who are fortunate enough to be able to make gifts. But if that same grandfather gave it to you before he died, your cost basis is his cost basis. Otherwise, 50,000. And what happens then is when you make sales, your cost basis is minimal compared to if you had inherited it. So people who have a lot of wealth and so forth play quite a game with this. And I sorry to use the word game, but it's an interesting and complicated process to try to balance all that. You do have gift tax. It's about 15,000 now, people making gifts to possibly avoid any sort of inheritance taxes. But most of us aren't gonna be dealing with that. Okay, one of the key pieces, potentially key pieces, and I would say for you, Dev, what's your name, Dev? You got your mics off.
It's Tom. I was a software developer in another life.
Oh,
So that Dev right there is Tom.
You'll be interesting, software.
Yeah.
My depletion work schedules are some that I developed, just some simple Excel spreadsheets, but they work beautifully for maintaining your assets. So
Yeah.
what's important is allocating the cost basis. If in fact you have a couple hundred acres and you're going to be making harvests and so forth, you have to remember that the portion of your purchase price or inheritance basis that relates to land, you can't recover until you sell it. So you've got to allocate the cost basis between all the assets involved in the sale, like land, depreciable land improvements, and of course timber, or if there were personal property or equipment associated in the transaction. The timber account is, what we're really focusing on here. Historically, it's been a little more complicated than some situations that I've been able to provide for my clients, and trying to really simplify this, because as you'll see in the examples I'm going to show you, allocating the cost basis can be a crapshoot. How are you going to differentiate what you paid for timber versus land. Well, in your case, Tom, if you're having a timber cruise, you know, you're way a step ahead. It's not absolutely essential, but you really put yourself in a good spot. And again, if if you're going to be declaring yourself a business, that isn't a deductible expense. So this is all moving towards, you know, what'll make sense, but I already talked about the land account being non-depreciable and, you know, maintained separately. All right, so what you may have heard the term depletion, timber, oil and gas, gravel, allow you to deplete a depletable asset as opposed to depreciating, you know, some sort of equipment or business building and so forth. So a timber account is for merchantable timber, the key being merchantable. So if you need to establish how much merchantable timber you have. And if you've already, and that may allow you to look at, say you purchased it this year. If you had an inventory, you could in fact look to current market, like with the Maine Forest Service in particular, and you could value the timber you have, whether it's logs or pulp or chips or whatever. The young growth and plantations that are listed here generally apply in the South, where people, you know, grow trees in plantations, plant, and, you know, every 30 years they cut everything and start all over again. That's not really the case here, because what you're trying to do is to determine how much per 1,000 board feet, how much per cord, how much per ton you have in the volume of timber you have. So, you know, historically, cords have been a, you know, 4 by 4 by 8, 128 cubic feet of wood. But more and more, we're getting into tons, you know, weight scales rather than doing some stick measurements. And of course, board feet, if it's merchantable as logs based on its dimension size, you know, it could generate 5 times the value at a sawmill than it would as pulp at a pulp mill. We've got fewer and fewer pulp mills, so, you know, we're starting to see things, a lot of things in tons, like wood chips at biomass areas. But so your goal is to come up with a cost per unit. And you can have many different units depending on the sophistication of the material, the timber you have. If you're able to distinguish between saw timber and pulpwood on the stump, you're a step ahead, especially if you're making sales. Now, this next section might be more appropriate to Tom than most people, because these are typical operating expenses when you file a Schedule C, if you're trying to deduct current expenses against current income. Or here's the bugaboo part of this: if you don't have any income and you're deducting all these costs, guess what? You're operating at a loss temporarily. And, you know, if you report losses year after year after year, the IRS might even take a peek and see why that is. But as I said earlier, when it comes to timberland, sometimes the most you can do is pay your property taxes and attend some seminars like this and do, you know, it's a long-term operation. But you may end up doing some timber stand improvement work, pruning, you know, and other sorts of activities like that. So these are a number of, I won't go into all of them, but you'll see that a lot of this is short-term expenses. You know, you mentioned some invasive work, and you mentioned also these kinds of things could be deductible, or you could capitalize them. And the standards are the same whether you're in the timber business or you're in some other sort of either a mom and pop. You know, are these expenses ordinary and are they necessary for you to conduct your business? Carrying charges are similar other costs that you do on a yearly basis, but you can choose to capitalize those. You know, you want to make sure that you don't lose it, you know, because if you don't do it, use it, you lose it, is part of it. So you have to, on an annual basis, make a decision that way, whether you're putting them into a depletable account or and by capitalizing them or trying to expense them. And I'm rolling along pretty quick, and I hope I don't see any real blank faces here, but there could be a few things. I've been involved with this for a long time, so I take a number of things for granted. But so these carrying charges are charges that you get to choose. I'm not going to go into great detail, but I suspect Tom will take a long, hard look at this. It's going to be on the website, so you can take your time and peruse through it. All right, forest management expenses. And the term here is management, okay? If it's like doing any other business, that you have to do these activities to conduct your business, and they're ordinary and necessary. My guess, Tom, I'm not trying to pick on you here, but I do think that you're a good example. Not in every respect, I can't count on that, but and if you're in a passive business, the passive means you don't do it. It's like having rental property and you hire everything done and you get income. You're not actively participating in the management of the property unless you're a handyman who, you know, takes care of your rental or passive income, interest income, and so forth. But if in fact you have this as an investment, there is an opportunity to deduct on Schedule A, which is your itemized deductions, any amount of forest management expenses that exceed 2% of your AGI. That's your adjusted income on the bottom of the first page and start of the second page on a 1040. And you know, if you're actually filing a Schedule C like Tom may be, those expenses, which are management, and you know, might occur on a very regular basis every year or every few years, you could do it. So here's primarily we're getting now into what I've spent a little more time on the area we just went through because of Tom. Generally, most people are not interested in pursuing that. They're just interested in, how am I gonna deal with this timber sale I just made, or the one I'm gonna do next year? So, you know, when you look at the income side of this, you're talking about receipts from sale of timber, how much of a gain or loss you have, what kind of costs did you have in making the sale? Did you hire a forester? Did you whatever? And what's your adjusted basis in the timber itself? And you may end up making what's a IRS code 631B sale, which is generally speaking a stumpage sale, selling standing timber. And you compare the price you get for that to your adjusted basis in that same timber to get your net gain. And that net gain is a capital gain. You're gonna show you the tables, but it's really significant. And also depending on what your income is, to have as much of that income as capital gain income as possible. And so one critical point is you have to hold timber for at least a year for it to be considered a capital asset. But you know, it's treated just like the sale of stock.
I have a question in that.
Yeah, sure.
So if it's not held for a full year,
Yeah, ordinary income.
Ordinary income. Okay.
And you'll see some very dramatic differences between
Yeah.
capital gain rates and ordinary rates.
So ordinary income versus capital income. And is there a way to deduct expenses, like to get like the login or in for the loggers to get their landing site from ordinary income?
So anything that happens to that timber, it's called timber when it's standing on the stump.
Mm-hmm.
The minute it's cut, it changes its whole character. It becomes any income you derive beyond selling the tree standing is ordinary. So if you were to look at what you could get at the mill versus what somebody would pay you for the standing timber, you would take the mill price minus the price you got for it to determine how much of a gain. That the minute it's cut down, it becomes the starting cost basis for whoever buys the timber for you, or it becomes your cost basis in making a sale at the mill. We're seeing more and more of that today. People are hiring somebody, a timber consulting firm like Prentice and Carlisle or AFM or those guys, and they say you're going to make more money if they act as your agent. So they don't pay you for the stumpage. They handle everything all the way to the mill, and then out of that comes the price they paid for somebody to haul it, somebody to cut it, and their commission. The reason I don't care that much for it is, and I sound like an IRS guy here because the glass might be half empty rather than half full, but you have liability if that's your asset all the way to the mill, unless you've got a good contract and a tight scenario. You may be subject to some liabilities or loss of the timber. And, you know, I liken it to a car dealer selling you a car at his cost. I don't think so. I hate to use the word kickbacks, but, you know, relationships develop. I've got in some arguments with some folks, but there aren't many players in this whole process. You know, there are big logging operators, and there's very fewer and fewer small-time operations. So business relationships develop, and you have a hard time as the seller of the timber at the mill to know really what kind of costs those are to get it all the way to the mill. So I'll get off that, but there's all sorts of ways to sell timber now.
Mm-hmm. We ended up doing we're trying to, we want to build a house on our property, but
Yeah.
we had to do some clearing and then
Yeah.
and trade for some of that. The property was big enough where they could harvest and
Yeah.
sell some of it. What we made from it is not at all, is a lot less than what we put in to get the road in that far to get it. The road
Yeah.
may become a driveway if we build at some point, but we spent a whole lot more money than we made, but we cut less than a year in. So it's like it's kind of
just like everybody else.
Yeah.
You know, the worst case scenario is for you to prorate it or to do some sort of division and say, you know, half of it is for the personal residence and half of it is for the timber harvest. I mean, that's probably the safest, but you have a right to be aggressive in how you pursue that. I would advise you to maybe do some sort of allocation on that road cost.
Mm-hmm.
So we've talked, you know, and generally speaking, most of us are in the investment side. Tom is very likely to be able to consider it, you know, a business. You know, you can have multiple businesses, and there's no reason why you can't. Just remember that you've got to actively participate in it. It can't be passive to you. Like
I'm out there every day. Like
if you lived in New Jersey,
yep.
you know, and just had a woodlot up here and told somebody to take care of it. So I don't mean to pick on New Jersey if anybody here is from there. So you're still smiling, Tom. No,
I moved up here from Rhode Island 2 years ago.
Okay.
So.
Welcome.
Thank you.
So there are also costs associated with making the sale. By the way, I don't have in another few minutes, it'll be 6 o'clock. I don't know about you, but I'm an old man and I need a bathroom break pretty regularly. So I'm not drinking anything now. But at about 6, we'll take 5 minutes, and I apologize for being too blunt about that, but there are a lot of costs that are associated with selling timber. Not so much advertising, but you may have a forester come in and cruise it, so you know, or marking and scaling it, so that you're gonna get. That's usually a separate fee from the forester or someone you might hire to oversee watching the cutter, making sure you get paid for every load that leaves that woodlot. And that's what consulting foresters do. So, and those costs are deductible against your sale price, along with your cost basis, to minimize the gain. Now, I'm not going to go into all the details here. If you look at, you can write this down, Tom, or anybody, section 126 of the Internal Revenue Service Code talks about what kind of income government payments could be excludable from income. Sadly, it's this, because it's not used a ton, Congress has not made, or the IRS hasn't changed any rules on just how to determine that. But I assure you, it's I'm assuming you're getting some potentially some EQIP money. Wildlife stuff is WHIP money. But they're all treated as potentially excludable from income because of their supposedly inherently good. I sometimes wonder if certain things just benefit just you, not the public in general, why you should be able to exclude it from income. And but that's a personal view, not the law is the law. So and here's some background. And so information returns, we're going to get to a depletion schedule and so forth, but why don't we take a 5-minute break right now, and I'll be back in just a few minutes, and we'll start getting into some real detail rather than broad summary. Okay? See you in a minute. For the record, I'm having a glass of wine, so. I hope Jen doesn't mind.
I don't mind. I prefer water though. Yeah.
Well, I'm on my own tonight, so I'm cooking after,
Oh yeah.
and a small glass of red wine is good for you, I think.
Yeah, I've heard that. Yeah. I've heard vinegar itself too
Yeah.
can be helpful.
I-
Yeah. Not as tasty maybe.
So how, is it
Yeah.
Lauren?
Yes, Laren.
Lauren, how big is your lot?
It's 68 acres.
Oh, good, okay.
Yeah.
That's a big house lot.
It is, yeah. It is a big house lot. We may when you're running by a section about gifting, we may run into that. We've
Yeah.
got if we give a piece to a kids
Yeah.
at some point, we may
Do
run
you have
into
it
that.
under the tree growth tax law? Yeah. No.
We don't. We just got it
Okay.
December 2022, and we haven't done that yet because we don't know which sections we would want to give away.
Yeah.
And so that might complicate it. And I remember we got bogged down with my family growing up with land and tree growth that we couldn't end up. They gave us money rather than land because the tree growth it
Penalty.
wasn't able. We couldn't get it out of tree growth, I guess.
Well, you can, and
Mm.
I spent a lot of time with the tree growth tax law. As a matter of fact, I'm meeting with an assessor on behalf of a client who's removing land, and I believe the assessor has incorrectly determined the penalty way in excess of what it's supposed to be. And I think you have to remember, is that you're only paying a penalty on the portion you remove, you don't have to take the whole thing out of tree growth.
Yeah.
In order to make a gift of, 10 acres or 5 acres or 2 acres to relatives or otherwise, or selling.
Yeah. My impression was you had to pay all the taxes back that would have been paid on it.
Not exactly. You look at the taxes that would have been paid versus what you paid, and the taxes that would have been paid if it were at its fair market value, which isn't always extreme. I mean, I'm of the opinion, unless it's really abusive use of the tree growth tax law, that the penalty is just another cost of making the sale, like surveying it and so forth. There are many situations that, it's not an enormous burden. I personally would not consider it a deterrent to putting it under tree growth to begin with. But
Okay.
If you want to talk about that a little more sometime, you're welcome to. So, is Tom gone for good, or? Hello, Tom.
I should be here, am I not?
Okay, the screen is not showing you there. Okay, good.
Yeah, I'm here.
So I'm going to get back at it here. The information returns that I'm talking about here, my guess is most of you have heard of a 1099. And when it comes to, there are 1099s for stock sales, there are 1099s for a variety of things, but one real problem we have is that the proceeds from the sale of timber require that the purchaser give you a 1099-S, as in Sam. Opposed to a 1099 miscellaneous that, if they were paying you for services rendered, that would end up being ordinary income rather than capital. So this has caused a lot of trouble. And the differences, as you'll see shortly, are very significant in terms of tax rates. So, if you get involved with a sale, make sure that you get a 1099 miscellaneous. Unless I actually standing timber, not if you get you should get 1099s, two 1099s if you're selling it at the mill. Those make it difficult for me, my clients who operate that way. I got to determine what their ordinary income is and what their capital gain income. So, and keeping good records is always a good thing when it comes to the IRS, no matter whether it's on a napkin or a sophisticated spreadsheet. It's very important for you to maintain records that you think will support whatever it is you're attempting to accomplish with the income tax. Now, here's the difference. As I said earlier, we have ordinary income could be, as little as 10, but as much as 35, and the average rate would certainly could easily be in the 20s. Capital gains, some capital gains are taxed at 0 with a maximum of 15%. Now, here's a table from the IRS. I didn't adjust this, but what's important to remember, you see this 0% rate on capital gains. If you're single and your capital gain income and your AGI is roughly, I think this year it's about 43,000 or less, it doesn't get taxed, no matter what your basis is. If you're married filing jointly and you make roughly 85,000, your adjusted income is 85,000 less, no tax on the capital gain. That's pretty significant. And I'll make a comment here. If you had your AGI was 100,000, and you had some part of that was capital gain income, roughly 80% of it would be taxed at 0, as opposed to ordinary rate. So it is proratable. And it's right here where I lose a lot of clients, to be honest with you. I'm not looking for a lot of them, but when they hear the magic word that their adjusted gross income is less than $83,380, they're off the hook, so to speak. All of their capital gain income would be taxed at 0. Excuse me. And there's a capital gain worksheet that you might not see if you were doing TurboTax or one of the electronic services, but on about page 43 of the 1040 instructions, you can see how it blends your ordinary income and your capital gain income into a tax rate that's used to apply to all your income. So that's really significant. So the sale of timber, sale of stumpage is capital gain. I've already talked about that it's capital, and the cut timber is, both a capital gain and potentially an ordinary gain. Property taxes, obviously you can, on any property you own, you could deduct it annually if you're able to file itemized deduction, or you could capitalize it and deduct it, capitalize part of it for what you're paying for timber and deduct it in part when you sell the property. All right, we're now to the Form T, which is Form T for timber. This is an information report. When you sell timber, you do not have to fill this out, but it's a great record-keeping tool for a lot of purposes, especially backing up what you've done in claiming cost basis and your net income. Also, some important information, if you'll see why you might need it, but the Maine Forest Service maintains some historical timber valuations that may come in particularly helpful if you're trying to establish your basis in a 1980 purchase and a sale in 2024, because you have to go back and establish what your cost basis is when you acquired the property, either by inheritance or purchasing. They're particularly helpful. All right, I'm going to switch screens. This simple estimate of gain. Historically, before some of the adjustments for rates, and it has been a bordering on, not complicated, but more difficult to establish your cost basis if it were 20 years ago or 30 years ago. What do? You take current values and grow and timber and grow them back. So I'm going to stop sharing and come up with what I've developed as a simple estimate of the gain. I've run it by the IRS. They've never challenged it because again, it's trying to realize that not everybody gets a lot of money for it. A lot of people don't have good records, and all right, so, well, here we are. Simon continues to smile at me the whole time. I think that's great. Thanks, Simon. It makes me feel good to have somebody really. All right,
I promise I'm carefully listening along while I eat my dinner, so I appreciate it.
Yeah, okay. All right, so sharing something different with you. This is an actual worksheet. This is for a friend of mine, and as you can see, if you look at the footnotes, this gentleman, I use the term gentleman, but I'm not so sure. He made a sale in 2022 and received income, a harvest, and received income in 2022 and 2023. This reflects a portion of what was cut in income he received in 23. It's when you receive the income that determines the date of sale, not when it was cut. It's a cash basis taxpayer. He bought the property in 1986, and in order to perform this process, I was able to get 1986 cost information, timber pricing from the Maine Forest Service. As you can see, he sold red pine, white pine, and white pine pallet primarily. And, you know, he got a 1099-S for $18,000. So the fundamental of this is looking at his current sale price and comparing it to the same material in 1986. So you see, I have a 2023 price and I have a 1986 price. And the relationship of them is, generally speaking, the current price you get is greater than what you purchased it for. This was a bit of an anomaly, and a matter of fact, it's an error on my part. But one advantage to this is timber prices vary. You know, if it's not linear. So from 1986 to 2023, there were fluctuations in timber prices, but depending on a whole bunch of things. So getting that relationship is important, and you can see the relationship is expressed here. So, and I can determine the actual cost basis here by multiplying what the price he got was by the relationship, and it's a reasonable estimate of determining the cost basis in 1986. As you can see, you got $18,000 for it. Based on this simplified process, I determined that he likely paid $10,000. So his gain was $8,000. So, I mean, this is a big deal. It's all capital gain income, but nevertheless, it's worth the effort, and it's quite a bit simpler than and one of the reasons I used this, I'm going to share another screen.
Jim, can I ask a quick question? Does the IRS
yes, excuse me.
Does the IRS not worry too much that there was a pretty substantial growth in that timber between 1986 and now? They don't mind.
They're likely, to be honest with you, Simon, they likely don't know.
Okay.
I'll show you in the next. I've got a little bit more sophisticated computation. You know, the IRS, this is a timing adjustment. I don't know whether Simon's an accountant or not, but you know, on a scale of 1 to 10, this is not that. This is about a 3.
Yeah.
It's not a credit or an exemption or whatever. And if you take too much basis now, you won't have it later. Except that in that approach, there's a lot of, I don't recommend it unless this is a once-in-a-lifetime sale generally. And there's no evidence of timber harvesting, and there is clear evidence that you do have cost basis. You just don't have a timber inventory or a forester or somebody to provide, or you can't afford that based on the fact the sale is somewhat nominal. So I'm gonna just, where is it here? This is an attachment that I provide to my clients when I employ this approach, and it's for the IRS to know. I'm not sure why this is not being shared. Oh, that's why. I think I'm getting some spyware and freeloaders on my system. Things are taking slow. But remember I said earlier about just explain what you did. Well, this is my friend, Mr. Smith. I wanted them to realize I'm a licensed forester for a whole bunch of years. But I just explained what he did. He bought it in 86, what he paid for it. There was no residence at that time. He didn't have an inventory, he still doesn't. He made a sale to Maine Custom Woodlands. In 21 and 22, I should have updated this as I did the other one, but this was a current presentation, but the point's the same. All harvesting occurred in 21, got payments in both years. He made a timber sale in 2007, but he never talked to me, so we never determined his cost basis, and he paid a tax on the whole amount of income. The spreadsheet that I just showed you, in determining the relationship between 86 and 2021, I used the dominant species and product that was involved. As I told you, I got historic information from the Maine Forest Service. I applied, so the IRS can read this, and they could demand more background, but effectively I said what I did, and I did it because I had no inventory. It's a one-time sale. You know, he's 78 years old. He's moving from the property this year, as a matter of fact. And I've been fairly successful with this approach on, you know, those kinds of transactions. So I am going to share the screen on something a little more complex. Let me see what time it is. All right, I think we can do it. All right. All right, can you see this screen different now?
Yep.
Okay, this is my own. The IRS doesn't provide working forms. This is an Excel spreadsheet that looks just like the IRS form in every detail. It's not particularly complex. It's got multiple parts, but it you know, I have it where it just follows from the allocation of the original purchase price. This, as you can see, it was a 2015 acquisition, and the volumes, if you notice, I knew what the inventory showed in 2022, so I grew it back by 2% a year to get what was on the property at that time. So I haven't, and you'll see later, I haven't forgot about growth, Simon. And then I had a price from 2015 and I came up with, for all the inventory, what the fair market value in 2015 was for all the saw timber. I did the same thing for pulpwood. You know, I had to say where I got it. The timber inventory was done by Sappi Forestry. Depletion for harvest in the future will require a growth increase of 2% per year. It ranges anywhere from 1 to 4. I think the IRS and me are just trying to be reasonable. I don't have enough data for this property to do any more than that. So the original purchase price was for, I got a little rounding problem here, was 70, I told you 75, but we're talking 80,000. And I got it, I developed it based on above on saw timber valuation, how many units we had, pulp valuation, and land at $324 per acre. I backed into that $324 per acre by taking the total price and subtracting the 2015 valuation. So, and to get that number. So, and then I'm going to be transferring that information. Here's the timber sale itself, what he sold, the volume, and the current prices. So, and as you can see, his gross receipts for this at these rates was 35,000. These are real numbers. He allowed me to do this as long as I called him Mr. Smith. So in order to do what I did, as we do in the acquisition section, I had to come up with a weighted average with a total value for logs and a total value for pulp. And you can see I transfer this to the depletion schedule, which is this. And the other hardwood that was included here, in order to calculate that, I got the components and did a weighted average. So this was all helpful in determining the acquisition of the property, 2015, by inheritance. You know, some of my rounding and backing in created just a minor discrepancy here. If this were for real, this right here, right, 80,000. He paid 80,000. Of that 80,000, 1,000 was legal expenses. He could have had expenses for cruising, surveying, and other acquisition. But when I'm done, the allocation of 80 has to equal the purchase price. So we already, when it came to land, I told you I took the total value minus the timber value that we came up with to get, you can see my calculation up here. A residual, it's not perfect, but it, you know, what is bare timberland worth? It's no easy task. And so I reasonably determined these numbers. You saw from these numbers originally from the allocation worksheet in the allocation and came up with those. So, and then the all-important depletion. As you know, I determined how much I had in logs and what that cost was, and I knew how much I had in tons and what that cost was. And there's the all-important growth, Simon. 8 years at 2%. So it went from 230 MDF to 267. I should have rounded that up. Okay, and let's use this one for the example. But so we have how much timber there is, and we know what it's worth. If we divide what it's worth by how much we have a cost basis of $161 per 1,000 board feet. And this cost number, if you remember, I went back to the actual sale was 156,000 board feet. I multiply that by the cost per unit to get what we're going to claim for depletion. And then at the end of the year, when we're reporting, I take what my starting balance was, and I subtract my cost basis to get what I have left. When you're using this slightly more sophisticated process, the IRS can be comfortable, generally speaking, that you will not be deducting that again because you've already used 25 out of the 43. Same process over here. So then on the last sheet, the important sheet, you got 35,000, which is here. We determined earlier that your cost basis in the saw timber was 25 and your cost basis in the pulpwood was 850. So you subtract from the 35,000, you subtract your cost basis right here, and you subtract the cost of making the sale. That was hiring a forester to oversee the operation. So his net gain was only $3,800. I don't know that you could normally expect that kind of a reduction in terms of your cost basis. So you might go back, I might go back and take a long, hard look. I mean, does the IRS gonna buy that? It was but it was, you would think it would be less because it was so long ago. But again, this is a capital gain. If you've overdone it here, you're going to have less he's going to have less cost basis when he makes the timber sale. One good thing about this form, using an Excel spreadsheet, if I look at depletion, all I have to do is create another sheet or multiple sheets for subsequent years and transfer the ending balances to the beginning balance for those years and go through this same process. So it's a good record keeping tool, especially if time goes on. Actually, I don't know of anybody else other than me and my clients who use it. The IRS seems to like it, as I would say, what's not to like, but this is more detailed than the first one, obviously, and will stand a lot of scrutiny. But, you know, there are things that I know or that based on experience, you know, a mom and pop preparer would likely not know. But, you know, everything's explainable. I hope it's logical. And, you know, I tell the client or the preparer where to put this on Schedule D or the 8949 form. So anyway, there is, I'm going to stop share and I'm going to show you, I'm not going to go through it, but I'm going to show you one that's quite a bit more sophisticated. Oh, gosh, Simon's still smiling. All right.
The math is the fun part.
Okay, I guess I decided I was not going to show you that, but what it does is the landowner has very good records, inventories and the like, and the landowner is going to be deducting having depletion costs from sales almost every year. So it demands you know, more detail. It can afford my time's not terribly expensive, but he can afford to do more in terms of inventories and planning and getting professional assistance. So it requires those details, as I said, good inventory and the ability to, especially if the acquisition was relatively new. One of my clients has 14 pieces of property that he acquired at different times. He's going to harvest them differently. So I had to complete 14 depletion schedules for him because he wants to keep records by depletion unit. Which brings up, we've got a little bit of time here. If you have more than one parcel, if your 200 acres, Tom, is in 3 parcels, and they're all contiguous or, you know, in the same general area. If you sold wood, it would go to the similar mills, and if they're like characteristics, you can combine all of that. If your property was contained in 3 different counties and, you know, your wood would go somewhere else, and one of them is primarily hardwood, the other one is primarily softwood, and you acquired them at vastly different times, you would have to deplete those separately. There's a lot of court cases. If you incorrectly combined those and had an average depletion rate for the multiple parcels, you could be exaggerating your cost basis on timber, the oldest parcel versus the new. But excuse me, as I said earlier, unless it's a large forest products company, real estate investment trust, or a TMO, it's probably not worth the IRS's. You've got records and they can go back. They've got records that they can say you provided to prove that you already took exaggerated that basis and you've got less basis to write off currently. So not everybody has to worry about it, but I said it earlier, there's some hazards of trying to recover all your costs too quickly. If it's a good balance, if it's going to be part of your regular income, that perhaps changes it a little, because, in order for it to get up and rolling, you need, generally speaking, some source of income from that property. But it's pretty hard to do with anything less than a couple hundred acres to truly consider it a business. But people have done, a lot of forest landowners who are members of Maine Woodland owners are incredibly particular and have a personal relationship with every tree on their property.
Yeah, I'll vouch for that.
Yeah, I mean, that's not a criticism, but
it's true.
But it is true. I can tell you, not to the tree, but pretty close to what's on my 30 acres.
Yep.
Depending on one circumstance, kind of have to be careful. Like I told you, with my Christmas tree farm, it was very important for me to have a steady cost basis. Every time I sold a tree, I knew what I had in it. And I reported that. And if you hold a Christmas tree for at least 8 years, it's capital gains. Before that, it's not considered timber when you sell it.
Gotcha.
I don't know if anyone's, involved in that. If you're not, don't do it. It's a lot of work. I killed myself doing it, and I thought my kids would like to help me, but I didn't let them shear trees, and they didn't want to be out there planting trees when the bugs were biting. They like selling trees and getting half the income, though. So, well, now any questions? I think I've got a little time.
Yeah, I have a couple.
Yeah,
I have a
good.
couple questions. I've had a lot of storm damage on my property this year.
Yeah.
So would it raise eyebrows if I deducted all that on my taxes? I mean, I've had a ton of storm damage.
Well, how are you going to determine it? I'm going to be a wise guy here. There is a process, but
I mean, I suppose I could go around and just log like what I lost, like board, like 1,000 board for like cedar or whatever it is.
Yeah.
But I guess I could do that and come out with like a guesstimate. But I mean, I've had like all my spruce, a lot of my spruce have come down.
Are you gonna salvage any of that? You can't have it
probably
both
for fire.
ways.
Yeah, for firewood. Yeah.
Well, so something that's a log you could have sold as a log, you're going to use as firewood, maybe.
Yeah, possibly.
You selling it versus insurance proceeds on a timber casualty loss. Timber casualty losses can be claimed as an ordinary loss.
Okay.
And that's particularly beneficial, but there's some strings attached. And those you got to compare your cost basis in not the individual trees, but the value of your property before the timber loss, and the value of your whole property after the timber casualty loss. And because in a 200-acre property, it may be relatively de minimis. I mean, would somebody pay you, now that you've lost that, pay you less today than they would before those blowdowns?
Yeah, probably not.
That's similar to right-of-way appraisals, where you look at the larger parcel valuation for payment. So it's no easy task, and I've been to court 2 or 3 times with major owners on that very subject, and I would say it'll be difficult for you to, but you really need to say if the exception to that, if in your 200 acres, you're managing it as 2 lots, even though it's one big lot because of its characteristics. You could claim that you have 2 blocks, so-called blocks, and that the value of and most of the work, the blowdown was in one of the blocks.
Yeah.
You could claim that that block is worth X dollars less to an average buyer now after the blowdown than before, and then go through the mechanics of determining the casualty loss. I urge you to look at the publication I mentioned earlier on timber casualty. It'll make be a lot clearer. But
all right. Now, what if they're plantings, sort of like the storm damage, like destroyed my plantings? I could deduct that though, like to replace the plantings I put in there. Could I do that?
You're doing plantings, huh?
Yes.
And the storm did the.
Well, the storm damage, the trees dropped on the plantings and destroyed them.
Oh. Well, no. I got to think a little bit about that. It would seem to me that the same process would come into play. Would somebody pay you less?
Yeah, that's true.
Because those the $200 worth of plantings that you have, or
yeah,
I doubt it.
That's
I'm
kind of
shooting from the hip right there, but
yeah.
I'd have to think a little bit more about it. Oh, Simon, you're with us. Nice.
I'm alive. Yep, I'm alive.
You're not a bot, huh?
I'm not, no. And this was great. This was very informative and very, very helpful for me. I'm at the point where I've had my land for, I bought 3 lots now, but variably, I guess, 5 to 8 years. Yeah. And I think I'm doing an okay job with record keeping, but it was very helpful to see what I will need to display in the future when I'm starting to account for things. So that was useful.
And this brings to mind a question that somebody was going to be participating tonight but couldn't, but left a question, and it was about how soon do I have to do evaluation of the timber before I cut it? And the answer is you don't. You have to do evaluation to justify, as you saw in my examples, before you file a return is the answer.
Yeah.
And really, you do the best you can with what you have. And I think the IRS, I'm comfortable that the IRS recognizes that Simon is a lot different than International Paper Company.
Right.
And your resources, your abilities are commensurate with doing a sophisticated depletion schedule.
Yeah.
And I think time has shown, I've been doing this for 7 years since I retired, and with a lot of clients, small clients, and we've tried to be simple about it, but explain what you did. And I haven't had any come back yet from the IRS. I don't think they gave a damn about. You got to remember that the IRS never, ever deals with this nor do accountants, small mom and pop accountants. They have no idea. And that's not a fault. That's not their bread and butter. So needless to say, in answer to his question was, you don't have to do anything. You know, it's going to be difficult enough trying to come up with a valuation when you acquired the property. And, you know, there are only so many tools that are generally available that a reasonable person would know about. So
I'm starting to wonder if I can use the cost basis if it counts as ordinary income, being where the stumpage was less than a year after we got the property. I'm starting to wonder. I wouldn't be able to use the cost basis at all.
Well, you could use the cost basis, but it would be ordinary income. The difference. Oh, I'm sorry.
Right? Yeah. Okay. Yeah. And so I'm wondering if, like, I have like the harvest plan has the percentage of the land that they were attempting to cut.
Yeah.
And then we have all the receipts and tonnage, and the board feed, all that. So we could kind of do a backwards calculation of the remainder of it that way to come up with that cost basis on the land.
You saw where I used the residual approach to come up with the value of the land. As long as you say what you did, I mean, couldn't justify going out and hiring an appraiser to determine the value of bare land. He probably couldn't do it, first of all. That, you know, there's not a lot of sales of cut over woodlots with nothing on it. But, you know, you're a good example of, I don't know if I said, I serve on the Land for Maine Future Board, and I'm the focal person for reviewing appraisals, whether they're easements or fee and so forth. And what has changed dramatically, the whole concept of appraising natural resources, but forest land and farmland, is that people are buying 100-acre home sites now. I mean, wealthy people from away. I don't know if that's you, but
no, I was born in the backwoods in Bryant Pond, Maine, and moved to Portland for a bit, but we're looking to get back to the woods now.
So there, you know, what's happening is, you know, especially in rural areas, I mean, it's not at all uncommon to see something like that. And people put conservation easements on property to try to avoid that. But somebody who can buy an old farmstead and 100 acres and doesn't care about generating lots of income from farming, it's happening tremendous in southern Maine in particular. I suspect that's what Tom did when he bought that property up in Charleston.
Pretty much.
Well, anything else?
Another question on that cost basis. If we paid a little bit over the assessed value, I mean, they assessed it based on a house lot, right? If we paid a little more than assessed value, because we recognize the value
means very little.
Very little. Okay.
You know, property tax assessment is not fair market value. It might be, generally speaking. I
mean the appraised value. Sorry, the appraised value. We paid a little over the appraised value.
Why?
When we did it,
Why did you do that?
Well, because we believe the value was much different. We valued the natural resources of that land, and I'm wondering if that's
what I did when I
potentially go into the cost basis for the natural resources of the timber. You know.
You know, it's what you paid. In the eye, you know, you were a willing buyer, and the willing seller sold it to you, and you know, the two. What you paid and what somebody might value it at, rarely, I mean, not rarely, but many times it's different, and it's value in the eyes of the beholder. And in my case, I knew there was tremendous value in the timber, and the seller apparently didn't.
Yeah, I mean, I know there's plenty of value in the land itself. I mean, just 5 acres. 1,000 feet away sells for a little bit more than what they appraised it as. So
Yeah.
I know that.
Oh,
I know
sure.
that we're all right. It's just how they happen to the timing of the other sales in the town and surrounding towns to come up with that appraised value. Just that's how it played out. So
Right.
yeah.
Yeah.
Okay.
Well, you've got a big grin on your face there, Tom. I hope it's because you know more now than you did when this started, but you know, to any of you,
Absolutely.
if you you know, if you give me a call sometime, I'm not doing this consulting to earn a living, but you know, I sometimes like to dabble with, you know, some quick answers and so forth. And it's usually, don't worry about it, relax, you know, just do the best you can with what you have. So
Yeah.
I'll give you my phone number.
You sure you want to
207.
do that?
What's that?
You sure you want to do that?
Yeah. I'm retired. Just don't call me during my nap time, okay?
All right.
207-215.
Hold on 1 second. 207. Yep.
215-7576. But if you need more than just some casual discussion, I do work as a consultant. I'm not advertising now in Maine Woodland owners, and so it's more word of mouth and so forth.
Jim, do you have an email if we do want to
Yeah,
get some
sure.
official consulting from you?
A real tricky one. JIMNORRIS 1650, my birthday, at gmail.com.
Thank you.
Yeah. And you know, I'm not particularly busy, although I'll be fishing and golfing soon by the looks of things. So priorities.
I'll definitely be in touch. Definitely be in touch.
Yeah. Okay. Well, listen, guys, it was kind of fun. I still have some wine left, so.
This was great, Jim. I can tell you, I asked my accountant about this stuff this year, and like you said, this was totally Greek to him. And
Yeah, it is.
This is really what I needed.
You know, you can't blame any of them because they just don't deal with it regularly. And you know, one advantage that, you know, is really significant when I tend to talk to my clients is that, you know, I worked there for almost 35 years. There are trade-offs being made constantly. You know, is it cost effective to pursue this? And even if it is, the minute you start second guessing somebody, you have the, you know, the ball's in your court. And what are you going to do? Well, you know, these IRS agents, there's only one forester left. There was 30 when I joined in. That's when large timber companies had capital gain treatment. They don't anymore on timber. So, but having some sense of what's significant with the IRS and what's cost effective for them or for the client, you know, it's nice doing this part-time, not earning a living, because there's nothing in it for me to make it more complex and time consuming, really. So anyway,
Thank you very much. It's just
that's my
helpful.
Story, and I'll stick by it. And like I said, all kidding aside, phone call, leave a message, or give me an email, and we'll do what we can.
Thank you
very much, Jim.
Okay.
Right.
Thank you.
See you guys.
Thank you.
Thank you very much.
Yep. I'm gonna see if Jennifer, are you still here? She's not. I'm gonna leave the meeting and cancel the whole thing. So bye, guys.